How are you doing?
Good. Happy Wine Wednesday.
Happy Wine Wednesday. We're sorry that we missed you last week. We were having some technical difficulties. Probably a little too tired from the 4th of July.
Too much sun, as they say.
Much fun. All right.
Awesome.
Well, Jenny, you want to? Oh, sorry.
No,
yeah.
that's okay. Oh, gosh, Michelle, stop interrupting me. Oh, my God. I'm just kidding.
I'm just eager to hear your wine pick.
We took a whole week off of wine. Whatever are we going to do? Okay, I'm going to talk to you guys about our wine for this week, which is a really beautiful wine. We're going back into the skin contact orange wine, this range, if you will. We're actually doing one that's domestic this week. So it is coming from the Russian River Valley, which is right along the coast near Sonoma. So not quite Napa, but they're really, really famous for their Chardonnay and their Pinot Noir, which this wine is neither of those things, but just thought you should know that. This is a Pinot Gris. And it's by Two Shepherds. It's a really, really beautiful orange, and it has this really orangey hue. So that's always fun when you're drinking orange wine. You don't always get those color tones. It's a little bit avant-garde in the sense that it's not going to be an easy drinker. Like it's kind of meant to have you sit and slow down for a little while, but still a really good hot weather drink. It's tart, it's refreshing. You're definitely going to get a little bit of acidity and a little bit of, it's really mineral driven. I'd say that this was definitely an orange wine that you would want to give to somebody who was kind of on that journey already. Maybe not one that you would want to start directly with, but it's still really lovely. Pinot Gris is kind of a sleeper grape, just as its normal expression. It's a really elegant grape. So if you're looking for something that you can drink during the summer, that you want to drink that is different from your normal repertoire, I would highly recommend Pinot Gris. And then what's more fun than taking a really beautiful grape and then making it an orange wine? I love it.
It is yummy. It's a good pick for this week.
Super, super fun. Okay, Michelle, what was your rose and what was your thorn last week?
Okay, let's start, I guess, with the rose. So since I did not speak with y'all last week, just wanted, my rose, I guess, would be 4th of July, because I kind of had a boring weekend this weekend, but the 4th of July, so as you all know, I'm located in New York, and this was actually the first year that I've seen like the Macy's firework display, like live and in person. So we went over to Long Island City to watch it, and it was amazing. It was probably the best firework display I've ever seen in my life, and it was so cool. Like in the beginning of the show, they actually had these like drone, kind of like a drone light show of like the Statue of Liberty, like the American flag, like right before the fireworks. And it was so fun, but it was crowded. There were like thousands. Yeah. And there were actually more crowds than probably like the Thanksgiving Day parade, which I go to every year. And it was just crazy to see, but it was a very fun time. Enjoyed it a lot.
I'm living vicariously through you for all of your Macy's Day parades that I've always wanted to go to.
You definitely have to come one year.
I will, for sure.
Yeah, they're so fun. And then my thorn, so I was actually telling Jenny this before we got on the call, but this is the first time this has ever happened to me. And I was out to brunch over the past weekend, and actually a bird pooped on me in the middle of
God,
right on my arm. I actually didn't freak out. My boyfriend was like, wow, I thought you were going to freak out at that. But I actually didn't. I just the waiter actually just casually brought me over a napkin and just casually wiped my arm. But it was the first time that has ever happened to me. And I know they say it's good luck. And I should have went out and bought a lotto ticket, but I didn't. But hopefully some good luck comes to me the next month or so.
Hey, I'm just convinced that anytime someone says it's going to be good luck, it's just because something bad is happening. Like it monsooned on my wedding day and everybody was like, it's good luck. And I'm like, no, I think it's just a bad hair day, but here we are. But that's so funny. Okay.
What are your
I'll start with my thorn. So my thorn is, I've noticed that the older I get, maybe we can do a pod on this at one point, like the science behind it, but the older I get, if I don't get good sleep, my immune system is just trash and I get sick super easily. So we were just kind of bebopping around and traveling a bit over the past week and a half, and I didn't get to sleep in my own bed, and I just don't do well when I'm not sleeping in my own bed. So I got sick, which is no fun. So I'm starting to feel a little bit better, but still kind of on the mend from that, which is kind of annoying, but our immune systems are there for a reason. So hopefully it will work itself out. And then my rose, it was my best friend's birthday several days ago. And she wanted us all to dress up like we were in the year 2000. So, or 2000 to 2003 was kind of the range that she provided us. So we had the best like costume party, and there was like a party bus that took us into the city, and we all looked so ridiculous, but like people truly committed and went all out. And like that's what I love about being a bit older. When there's a theme party, people are like down to shoelaces. Like everything was so, I was just dying because like obviously we lived it. And everybody's dedication to like having the best outfit. Like we should have done a contest, honestly, because it was so fun. Everybody did so well.
It looked very fun.
It was fun.
You guys are doing stuff, but it looked very fun. But thank you for, powering through and coming on to talk to us today. You don't look sick at all.
Well, you're so sweet. Thanks. I'm super excited about the topic today. So I definitely had to come on and chat with you guys about it.
Yeah. Well, thank you. And then as we do every week, I'm just going to leave you guys with a little quote of the week and some motivation for you guys with this quote. But I was looking at some like female entrepreneurs and really prominent women that I follow, and I saw this quote from one of them, and it just says, "Success doesn't come from what you do occasionally. It comes from what you do consistently." And it's from Marie Forleo, and she's an author, CEO, TV host, and she's actually named by Oprah as a thought leader for the next generation. So I thought that was just a good motivational quote for us to, hear, just to know that success doesn't happen overnight. I feel like we really touched upon this topic, a few times over the past few weeks. Just wanted to reiterate it again.
And if you guys haven't already checked out Marie Forleo's book, Everything is Figure Outable, highly recommend. It's a great read.
Great. Okay, so today's topic, and like I said before, Jenny is going to chat a little bit with us, but we're going to talk about research and development tax credits, which is a lesser known tax strategy for businesses that are engaging in innovation. So on that note, Jenny, can you tell us a little bit more about what R&D tax credits are and how they work?
Yeah, so R&D tax credits, or also known as research and development tax credits, are a dollar for dollar tax credit that is available to companies or businesses that are engaging in innovation. And I know that kind of sounds a little bit like a misnomer. You kind of think of like a science lab or a lab coat or those types of activities. But I think it's helpful when you're trying to understand full on what a tax strategy is, to understand the intent behind the legislation, because legislation drives behavior. So this credit was enacted back in the early 80s under the Reagan administration. And I tell you that because at the time, the economic climate was very tumultuous, and there were a lot of jobs that were being shipped overseas. So we wanted to figure out a way that we could keep development stateside and create jobs in the American economy. So essentially, this was treated initially as a hiring credit, and it was for folks at the time, mainly in the manufacturing space, because that's where a lot of the innovation, product development was taking place. The advent of software, we hadn't gotten very far there, and we were not in the economy that we are today with all of the variety in terms of industry. But one of the things that was really cool about that legislation is it was written to be extremely broad, which has been really helpful. Fast forward to tax year 2023. And, the credit has only been made a permanent fixture of the tax code and expanded. And there are more and more industries that can avail themselves to it. Mm-hmm. So essentially, a credit is more favorable than a deduction. And I'll give you guys kind of a very, very quick example. Let's say as a business, you owe to the IRS $100,000 in tax in a given year. And then we come in and we find a research and development tax credit for $50,000. You can directly reduce the check that you write to the IRS by $50,000 for performing these activities that we'll dig into a little bit later. So it's a direct reduction for the bill that you owe the IRS. Who doesn't love that?
Exactly. No, I would love that. Tax credit. Okay, perfect. So I know you touched upon a little bit about the activities. Can you tell us what types of activities and expenditures qualify for these tax credits?
Yeah. So it's funny because I feel like a lot of people that maybe have a little bit of a tertiary connection with the finance industry will talk so much about the expenditures that qualify and what buckets of cost we can look at for the R&D tax credit. And as a consultant that has dedicated my career to this credit and all of its nuances, I think that's a bit of a miss. I think that the way that the legislation is written, this is an activities first approach that we should be taking. So first and foremost, we need to identify, do these activities that these folks are engaging in even qualify? And then second, we'll look at the expenditures that we may be able to quantify towards the credit. So essentially, in a very, very broad strokes way of looking at this, activities that qualify towards the credit are going to be any activities that are undertaken by a company and its employees who are developing a new product, a new process, a new formula, an invention, a technique, a piece of software. Any of those activities, either on producing one of those or on, it can be an improvement as well. It doesn't have to be a new product. It can be an improved product. So experimental theoretical research, prototype development, software development, testing, validation. A lot of these activities that these companies are performing day in and day out will qualify, which, as you can see, that is extremely broad from an industry perspective. So folks from the aerospace industry to the software industry to the engineering industry, you name it, there are so many industries that can qualify. And that's called essentially the business component test. Once we've identified that your firm or your company has a qualified quote unquote business component, then we can look to see, okay, what expenses can we recuperate for this company in the form of a dollar for dollar tax credit? And the three buckets of costs that we're able to take a look at are going to be wages first and foremost, because as I indicated early on, this is a wage-driven credit because we were trying to foster economic growth by way of hiring employees in America. So any wages that are paid out to these employees that are engaging in these activities, any outside consultants or contractors, albeit we do have to take a haircut when we're looking at those expenditures because, again, the government wanted people to be brought on full-time. And then the last expenditure is probably the most highly regulated and has had the most case law subsequent is supplies or raw materials that are utilized in the context of research.
Okay, got it. Wow. Okay, very good information here. Definitely did. I didn't know any of this, so.
Thanks, Michelle.
So let's see. All right, I know you said a little bit about aerospace, software engineering, but are there any specific industries other than those or sectors that benefit the most from R&D tax credits?
Yeah. So the beautiful thing about the program is there is no cap, right? So there's going to be multiple companies that can qualify, and they can qualify for as much as they want, so long as they have the tax liability to absorb the credits. But the big industries that you typically see, and I've worked with folks all over, have been software, engineering, and manufacturing. And again, that is not encompassing. It really is industry agnostic. But one of the really cool things is, especially like if you take the manufacturing space, for example, that truly meant, at least in the initial phases of this credit, developing widgets or, creating whatever it is, that makes a machine work. And there's companies that create every single component of that machine, and those widgets and the time that it takes to make and design those would qualify. But over the years, even manufacturing has expanded. Think about how much more hyper aware we are about food now. We used to just kind of eat whatever, especially in the 90s. Food nutrition wasn't really a thing. And now there are so many folks that are hyper aware from a food allergy perspective. People want to be gluten-free. People want to be dairy-free. All of those parameters drives behavior to develop products that weren't on the market initially. So there's a lot of R&D in those activities for these companies to bring these products to market. So that's been something that's really interesting, as well as working in the biotech industry for folks who are trying to develop maybe some tests. I've worked with clients before who were creating, gut biome tests or tests that can tell us a little bit more about the female body as it relates to pregnancy. So any innovation that's taking place, all of those efforts can be rewarded and recuperated by this credit. Also, the biggest one that has really shot up has been software. Software obviously has had a huge glow up, especially of late. And it was initially extremely difficult to discern or delineate how to qualify the activities as it relates to software. And I think a lot of that has to do with the fact that most people in finance don't understand how software is built. So it took a lot of kind of, breaking that down, reverse engineering, and understanding the activities that goes into it. We have a lot more clarity now as to what qualifies from a software perspective. And it was actually, the code was actually expanded in tax year 2016 to encompass even more types of software, which allows the reach of the credit to be even larger for a lot of companies.
Okay. Wow. Awesome. So now, how do these companies determine if they're eligible, if their activities qualify for the R&D tax credit?
Yeah, so this is something where I would say, obviously, we can't know everything that is available to us as a company, and this is where you would really want to work with somebody that is a qualified consultant in this space. There are some CPAs that will do an analysis for you, but on the whole, most CPAs work with consultants like myself, and we act as a liaison. I always tell people that your CPA is an expert in your holistic tax picture, and we are experts in this one line item that requires a ton of substantiation. If you think that you may qualify, that is definitely a sign that you should reach out to somebody who works in the consulting space for R&D tax credits. Maybe reach out to your CPA, see if they have a preferred partner that they work with. And it should be anytime that I'm working with a client, I always do a preliminary exercise to determine A, are you eligible? And B, about at what level? What are we looking at? And explaining to them the process and kind of the cost benefit analysis of what it looks like to pursue these credits.
Okay. Now, does it matter how big a company is to be able to qualify for them?
No.
No. Okay.
So there are no limits in terms of company size. But like I said before, you would definitely want to do an analysis, maybe if you're in those very initial phases, to determine, is it worth it to do the legwork to start right now? This is a credit that mathematically builds upon itself. So the sooner you start, the more favorable it is for you long-term, and the more easy it is to continue to build out from a record-keeping perspective and from a credit maximization perspective. There are two calculation methodologies that we're able to avail ourselves to. So in order to do that, you need documentation kind of from inception for one of them. So it's helpful in those early stages to make sure that you're holding on to everything, make sure you're talking to somebody that can qualify you and kind of walk you through the process and set you up for success in the future.
Perfect. And can you provide some insight on the process for claiming, the R&D tax credits?
Yeah, absolutely. So first and foremost, you want to determine what types of activities are taking place in your business, and you'd want to connect with somebody who can walk you through that. From there, once that professional is able to discern or delineate kind of what we're looking at from an expense perspective, then you would engage with that person and they would walk you through their study process, which should look something like this. First and foremost, you're gathering initial financial and project and activity information that you provide to that consultant so that they can take a look at not only the tax year that we're hoping to calculate a tax credit for, but also 3 years prior, because like I said, it's the credit for increasing research expenditures. So we need to establish a baseline to see where those activities started and how they've progressed over time. From there, once you've gathered that initial information, the consultant puts the calculation model together and they reach out for next steps with you, which would be to conduct what we call a project interview or an allocation interview or a combination of both. And during that process, we would gather information about each employee's day-to-day activities, and we would quantify a time or a portion of their salary that we're able to take towards the R&D credit And essentially by talking about what their daily activities include and what types of projects they're helping on. And then we would take what's called a project-based approach, because the IRS has stated time and time again through various case law examples that this is what they prefer. They want to see these activities that are taking place tied to the product or process or project or whatever it is that they're working on. And they want to see that that employee that we're allocating towards the credit was working on that project. And then from there, we would do the credit computations. We would look at both. You're able to take advantage of the credit calculation methodology that yields the higher benefit. So likely, barring some crazy scenario, we would likely choose the larger benefit. It is displayed on Form 6765, which is encompassed with your larger return. So before we release, we would get on the phone with the client. We would walk them through our analysis, tell them our findings, and we would likely loop in the CPA at this point, if we haven't already, which hopefully we have, and walk them through the implications to understand what's going to happen, how this credit is going to be utilized, when they will see the benefit. And then from there, the majority of the legwork falls to the consultant to put together a comprehensive report of all of our findings. I always tell clients that this is really kind of a case of show and tell, right? This is what the number that we came to when we did our analysis, and these are the activities that substantiate that number.
Now, are there any specific documentation or record keeping requirements that these businesses should be aware of?
This is where it's so important that you work with somebody who not only understands the ins and outs of the program, but has had enough reps with the IRS to understand what they're looking for. Because when you read the statute and you read the code, there is no specific documentation requirement. So if you're coming to it fresh without any experience, you would think, oh, maybe it's really not that big of a deal. I know I've read a couple articles on it, but I don't see anything in here that requires me to have any documentation. This is absolutely false. There are documentation requirements, and it is veiled in some of the code. But the problem is the IRS never really came out and said what it is exactly they were looking for. So for me, I've been through enough audits to know what holds up, and we foster our study process around that so that we're gathering that information as we move through, so that if you do find yourself being audited or pulled for audit, we already have all that information that we can supply to the IRS agent.
Okay, great, got it. Now, how can companies stay up to date with the changes in R&D tax credit regulations or incentives?
This is something that you should definitely also hold that consultant accountable to. Although a lot of the laws from a tax perspective in this country have been pretty consistent, there are major sweeping changes that seem like they're small changes that take place that you definitely need to be aware of. That this credit has been around since '81, but it has been expanded and restricted. And then most importantly, there have been so many cases that have been handed down from the tax court that have changed the way that we should be approaching this from a substantiation perspective. So that is something that you definitely need to work with somebody qualified so that you can make sure that you're in compliance and you're doing what it takes to have all of your I's dotted and your T's crossed.
And what are some of the common challenges that you've seen that companies face when claiming these tax credits?
Definitely lack of documentation. I think that this is something that I've gotten to a point in my career where I ask that question from jump, right? When I'm doing that initial analysis before we even sign up. And although there is no, specific requirement, I still want to dig in and get to know that client's business and how they're operating so that we can gather all of the things that we could potentially use as, for lack of better terminology, as proof of how we're substantiating these credits. So many companies, whether their books are a mess because they just have grown so quickly, they don't have the time to work with somebody to help them clean them up. Or, back in the day before we were going strictly remote in a lot of cases, people would just talk about the activities that were taking place. They would troubleshoot verbally, which is great. And there's a lot of qualified activity that's taking place when you do that. But if you're not substantiating it, how is the IRS to know that those conversations are taking place? And this is something that I'm very forthright with my clients about from jump. Like, look, we're going to have to adjust our allocations and what we're qualifying you for based on what we can prove. So Every year it's going to be better because now you're aware, and every year you're going to have a firmer understanding of what we should be keeping, and you can create, more systems to put in place from a documentation standpoint. But that is definitely the thing that I struggle with the most with a lot of clients is maybe they don't have the best record keeping systems. And then also the education curve is pretty vast the first time that we work with a client because, there are some subjective portions of how to qualify for the credit in terms of how we quantify the activities. So you just have to educate, and make sure that you know this code in and out when you're talking to your clients, because you have to be able to provide them with insight when they ask you, does this qualify? Does this qualify? Why or why not? And those are something that, especially the first time I work with a client, we will take as much time as we possibly can to educate them. And we work with them once a year. This is a permanent fixture of the tax code. So we do work with them once a year, but they're running a business, so they don't always remember. You have to leave some time the next year to walk them through as a reminder. This is what we're looking to quantify. This is the types of activities that do and don't. And then just making sure that you're available to provide that backdrop for your client.
Okay, great. So documentation, education, and I see that too in my field, that those are, two big areas. Always make sure that you have your, ducks in a row, you're documenting everything, and then also educating, like either, your clients or just keep them educated. Great.
110%.
Are there any recent or upcoming developments in R&D tax credits regulations that the company should be aware of?
Yes. So this year, starting January 1st, there were several provisions of the CARES Act, which was enacted late 2015, early 2016, which made the R&D tax credit a permanent fixture of the tax code. There are several provisions of that legislation that sunset this year. And one of the major ones is 174 expenses, which are a lot of expenses that these companies are incurring as typical above the line deductions, now have to be amortized over a 5-year period, as opposed to being immediately deductible. And I know that that's a bit technical, but that is a massive, massive transition for a lot of these companies because they were used to being able to take all these expenses that they were incurring and immediately deducting them, which then reduces their tax liability, which then in turn reduces their tax bill. However, this requirement that requires us to amortize and capitalize those expenses that are 174, there's a Venn diagram crossover for Section 41 expenses, which are those wages, supplies, and contractors as well, that now have to be amortized, which is doing very, very bad things for a lot of these companies because their tax liability is shooting through the roof, largely unexplained to them. It's not something they anticipated because it was not something that was ever supposed to happen. There was legislation on the congressional floor in December and several times prior in these discussions to not let this ever go into effect. And it's something that has bipartisan support, but as you know, when it comes to Congress, things don't always move quickly at all times. So here we are having to contend, we're in July, having to contend with the impacts of this legislation. And they are sweeping. These people are having much larger tax bills than they know what to do with, because maybe they have $1 million in Section 174 expenses that they used to deduct, and now they're having to count that as income. And you have to pay, your 25% or your 30% or whatever your tax bracket is on that. So, that being said, that is in effect right now. There is a bill on the floor with 110 sponsors right now that we anticipate will be overturned, just a matter of timing. And it makes the R&D tax credit more important than ever, because now there is way more tax liability that needs to be absorbed. And although it's not going to be the immediate effect that we've seen in years past, companies need this as a tool to combat these major changes that are happening. The R&D credit, I always says, has a major PR problem. All of the main companies in the tech sector, in the engineering sector, and the manufacturing sector have been taking advantage of this credit for years. So it's something that you definitely need to not only be aware of, but if you're eligible for it, you need to understand the ins and outs of the changing legislation and how that can impact your bottom line as well.
Mm-hmm. Definitely. What advice would you give to companies that are considering claiming the R&D tax credit for the first time?
Okay, so this one, again, I hate to harp on documentation, but I truly think, like I said, this is a credit that mathematically builds upon itself. So when you think about it from that perspective, every year that you can provide documentation from inception, if you're starting small and you're going up in your qualified activities, the credit's going to be larger, larger, and larger, right? So you want to do everything you can to pay attention to your processes. Because if you don't, and you have no idea what your process is, when you work with a consultant like myself, you're going to have to reinvent the wheel, and it's going to pull you away from your business. And that is not the point of taking advantage of this credit. Our job is to make our footprint on your business as light as possible so that you can continue to use the funds that you're receiving from this credit to continue to scale and potentially to hire some more people, which is my favorite thing when that happens with my clients.
Okay. Great. Thank you. This was such good information. And lastly, if anybody has other, questions for you, if any other advisors or accountants want to, get in touch with you and see how they could lend value to their clients about this, how can we get in touch with you?
Yeah, thank you so much, Michelle. So like I said, I love to liaise with strategic partners, specifically CPAs, because we can be a powerhouse to help the client. And you're on the compliance side and I'm on the strategy side with regard to how we can maximize people's bottom lines. So love to work with strategic partners. You can find me on LinkedIn, Jenny Varteressian. You can also find me on Instagram, and I have a link to my Calendly for a 15-minute chat if you guys want to get in touch with me that way.
Okay, great. And like I said, thank you again. I learned so much from this episode, and I know this is really important, valuable information for a lot of businesses out there, especially if they don't know about these tax credits and how to take advantage of them, and also for advisors or accountants.
Agreed. You can be such a value add if you want, even if you're not in the space of identifying tax credits. If you work with a client, this is a huge value add that you can bring to them. And I love to partner with people like that.
Exactly. Awesome. That's our episode for today, guys. I hope you enjoyed it, and I hope you go out there and finish your Wine Wednesday. Make it a
Absolutely.
good one.
We'll see you guys next week.
Yeah, we'll see you guys next week. Have a good week.